Aussie dollar daily forecast, October 19th, fxempire.com. The Aussie dollar pair rose again during the session on Thursday. As you can see, the biggest problem we have now with this pair is that we see it as a big consolidation area between 102, it's really 101.80 or so, but 102 and 106. And the problem with that, of course, is we have a midline, which is something that's very common. It's an area right in between where exact balance seems to come into play. That's essentially where we're hitting. So what we'll need to do is pay attention to this pair, not get involved in it right now because it is in this no man's land area. But what we found is over time, when a pair fails to return to the top of a rectangle, then more than likely that means it's about to go through the bottom and vice versa. Obviously, it's too early to say this, but it just sets up nicely to pay attention to. With the Federal Reserve printing the dollar as much as possible, though, it is feasible that this pair goes higher. But you have to keep in mind that the RBA, the Reserve Bank of Australia, is expected to do at least two rate cuts between now and the end of winter in North America. I should specify, as opposed to their summer. So by the time March rolls around, there very well could be two interest rate cuts. If that's the case, then the Australian dollar will more than likely lose value. Uh, will it lose value against the US dollar? Maybe not, but it will underperform its commodity currency cousins such as the Kiwi dollar and the Canadian dollar. So we actually feel that if you're going to play the commodity aspect of the forex markets, you might be better served going into the NZD or the CAD as opposed to the Aussie.